Welcome to Brookfield Perspectives, a podcast that explores the Brookfield ecosystem's role in creating sustainable wealth on a global scale. On the heels of our 2025 Brookfield Investor Day, Nick Goodman, CFO of Brookfield Corporation, and Sachin Shah, CEO of Brookfield Wealth Solutions, join us to share key takeaways and what's on the horizon. Here's our conversation. Sachin, Nick, it's great to have you here with us today to bring some of the main takeaways from the day to our audience. What are some of the main points you'd like our investors to take away from Investor Day this year?
The punchline for Brookfield Corporation really was that the outlook for the business and the earnings and the growth is incredibly strong. We delivered 22% annual growth in earnings over the last 5 years, and we believe we have all the foundations in place to replicate or exceed that going forward. Our plans show earnings growth of 25% on an annualized basis over the next 5 years. And that really comes from a couple of key areas. It comes from us participating in the growth of our core businesses, the growth of Brookfield Asset Management, which was covered in their own presentation, and you can listen to that in the summary. It's the growth in the Wealth Solutions business, which Sachin can talk about. Its increasing position as an investment-led insurance business that will allow us to sustain the growth of the corporation for the long term, delivering excellent returns on equity without changing the risk profile of the overall business. It comes from the strength of our operating companies, and I'd say the one that's poised for the strongest contribution over the next 5 years, just given the cycle we've been through in the last few years, is the real estate business, with the operating fundamentals really turning, cap rates coming down, liquidity coming back to the market, and a real step up in transaction activity. And that's really favoring the highest quality assets, which is where we are positioned in the market. And then the other two elements I think that are going to be material contributions to our business. The first is carried interest, which is really at an inflection point for Brookfield and will generate significant cash flow over the next 5 years. And then our capital allocation. And capital allocation is very important to Brookfield. It's a methodology and approach that we've honed since our inception of surfacing cash and capital up to the corporation, where we have a unique lens on the relative growth opportunities across the business. We can allocate capital to the highest and best use at any point in a cycle. And as we do that over the next 5 years, we hope to replicate what we've done historically. Look back to the business we scaled in Wealth Solutions, the share repurchases we've done at deep value, and we expect to continue to do that. And so when you put all those pieces together, we think it leaves us very well positioned to continue the growth trajectory of the business.
Nick, you touched on investment-led insurance. Sachin, can you help us understand, what does that mean? What are we saying when we say investment-led?
Sure. As we described earlier this week, we at Brookfield have spent the last 25 years building out the ability to invest into the global economy, into assets and businesses that underpin global growth and some of the largest themes in the world, like renewable energy, real estate, global infrastructure, AI now. And these businesses and assets that we've invested in to create long streams of income that grow over time, inflation protected, and have tremendous scarcity value. And what we've done is really tap into that to support our Wealth Solutions business, where predominantly we serve people who are getting close to retirement age, and what they need are long streams of income to support their life post-employment, and where they don't benefit from defined benefit pension plans or the necessary government support schemes. And therefore, they have to invest a little bit of their money to provide income during those retirement years. And we've been able to match up that skill in investing with the ability to raise money from retirees or people approaching retirement. And Brookfield Wealth Solutions sits in the middle of all of that, facilitating that activity.
And Sachin, so I was going to add, is it fair to say the founding principle of that business is really about delivering strong returns on equity? So it means that the growth of the business is led by the investment opportunity we see in front of us with discipline, which means we can scale without sacrificing returns, which really means we can scale a business which will be durable through cycles, and then we'll have effectively really strong alignment with policyholders because we are all seeking the same outcome.
That's exactly right, Nick. We have been clear from the outset that this is a business that can compound capital at a mid-teens rate for many decades to come. Therefore, the investments we make, the returns they generate, and our ability to pass along streams of income to retirees all are done with the view of, can this generate a mid-teens compounded return for Brookfield? And we're not chasing growth. We are building a business that can be profitable through the cycle.
Which means that you will only be growing when you see the investment opportunity. It's not growth for growth's sake. It's growth led by returns and investing.
That's correct. And if you look at most traditional insurance companies, Nick, Many of them are using leverage as a form of capital to enhance their returns. And we've gone the other way. We're actually driving leverage down and pursuing great investments that are sourced by Brookfield that can actually enhance returns. We might still deliver the same net return, that mid-teens return on equity as a traditional insurer, but we're going to use a lot less leverage to do so. And therefore, we think the earnings quality that comes out of this business is much higher.
Sachin, how do we think about policyholders in all of this?
We think it has multiple benefits to policyholders. First and foremost, I just want to remind everybody that this business we've built out at Brookfield Wealth Solutions has been entirely funded by Brookfield Capital. We have no third-party capital in the business. We're not bringing client capital into it. And that's an important point because our capital is perpetual and our obligations to policyholders are long. So we sit side by side with policyholders in complete alignment, and their success leads to our success. And therefore, we never have to worry about whether we are at odds with each other. Number two is, as I said earlier, we're looking at investment returns to drive the total compounding of capital in the business, not leverage. And that means you have a safer balance sheet that underpins policyholder liabilities. If we use less leverage in this business, which we do today and which will actually decrease over time, policyholders have more capital supporting their annuities. And that's good for them. And it gives our business more financial strength to deliver the promises we make. And then third, I'd say, given that we are investment-led, and we can generate better returns through the areas of expertise we have at Brookfield, the hard asset investing capabilities we have. It means we can actually offer more creative products to policyholders. So retirees have more competition, better product set, and more to choose from as they plan out their retirement. And all of that ultimately is a benefit to policyholders.
It's a lot like how we've just built Brookfield over 120 plus years. Conservative capitalization, investing into the things we're good at, generating outsized returns while taking moderate risk with our own capital. We're just applying our learnings.
It's the same playbook, Nick. It's the playbook we've been a part of for many decades, you and I.
Nick, one of the things you mentioned earlier is real estate and how that's contributing to our way forward. Tell us a little bit more about that.
Sure. I think it all comes back to the same principles, which is we have a deep investment and operating capability in real assets, and the investment horizon is long. And we form a view on assets or markets we want to be invested in, and we invest when we see value, and then we use our operating expertise to generate and create that value through cycles. And we take a long-term view. And we know real estate, which is a prime example, is a cyclical market. It's been through many cycles in the past. They all feel different, but they all pass. That much we know. And real estate has for sure been through a cycle, and retail and office have been the poster children for this cycle. But our view was if you own the best assets in the best markets, then those assets will thrive through a cycle. And it's different to our infrastructure and renewable power assets. When you see inflation, you get an immediate impact to your revenue stream through their regulatory tariffs or through their contracts. Real estate takes time, but it plays out in the end because for the last 5 years, there has been very little to no supply being added to major markets. Yet demand has grown in the background. Well, it hasn't grown from necessarily least demand for the first 3 years, but people were adding employees. And now that people are back in malls, back to work, back in the office, there is a shortage of space. And that is leading to demand for the highest quality space that I don't think we've seen before. We are consistently signing record leases around the world. This is not just New York. This is around the world. So the operating fundamentals are very strong. Sentiment, without doubt, has shifted. You can see that in the tone and the conversations we're having, and the capital markets are back. We are financing now at very attractive rates for office, for retail around the world. And that is going to lead to, in our view, significant step up in transaction activity over the next 5 years, over our plan period for sure. And we think that's going to be a catalyst for earnings. But again, this is consistent with our playbook. This is not a surprise to us. We were very stubborn in our views through the last 5 years, which might have been contrarian to many, but we see it playing out. We think it's going to be very additive. And I just say as a general comment, transaction activity more broadly has obviously been muted up until maybe 12 months ago. We've seen that step up significantly, and that is very helpful for the whole organization. Capital recycle, capital will flow, and that's very additive to the franchise.
So we've covered a lot of ground with both of you. What are you most excited about?
What I'm always excited about at Brookfield is our ability to evolve. We are now capturing opportunities in some of the biggest themes on the planet, AI, aging populations, yet sticking true to what we've always been good at, hard asset investing, low levels of leverage, strong capital base, and really a long runway of growth. So I think that unique blend of being true to who we always have been, yet evolving with the world around us and having decades of growth in front of us is what I'm excited about.
And just drawing on what Sachin said, when I look across the three businesses, the core businesses, asset management, wealth, and our operating businesses, we have three tremendous platforms in place with really strong earnings power. And I think the foundations are in place to continue our growth trajectory. It's really exciting to see where we can go next. So I think stay tuned. I think we have great things ahead of us.
Thank you both for joining us today. It was great to have you.
Thank you.
Thank you.
Thanks for listening to another episode of Brookfield Perspectives. Make sure to follow us wherever you listen. You'll be the first to hear when new episodes drop.
This podcast is for educational and informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy any securities or related financial instruments offered or sponsored by Brookfield. The information and views discussed are subject to change without notice. Any investment involves significant risks, including loss of the entire investment.
Audiation.